Hello, everybody. This will be applying footprint charts, kind of interpreting them and kind of using them to help you with trading. If you guys learned something new from this video, please give me a thumbs up and subscribe if you haven't already. Plus, I'll leave this as a part of a video in the Exochart series of a playlist, so feel free to check out that playlist in my channel, as well as I do have other Exochart videos teaching you how to use Exocharts in general. And so today we're going to be looking at kind of delta and just kind of interpreting net longs, net shorts with open interest, and then learning about CVD and really CVD divergences and how to use them with Exocharts and in trading in general. So it's going to be a packed full of information video. So grab your cup of coffee and write some notes down. And just kind of bear with me with this video. Not really sure how long it's going to be, but again, just bear with me. And so again, as a reminder from last video, open interest, you can look at it as participation of traders, other traders entering the market. It's I guess you can look at it as a attendance of traders, total amount of people opening up positions into the market, and it is made up of net longs and net shorts. And just gonna adjust my screen here. You can see on the top is net longs, where usually when it increases, longs are opening, and when it decreases, longs are closing. Likewise, net shorts, where net shorts will increase when they are opening and then decrease when they are closing. Again, you can go up onto the top of the toolbar here and just type on and off the NL and NS, NS net shorts, NL net longs. And that just kind of incorporates it into the open interest. Now, usually net longs and net shorts don't really make up the open interest. They're just a amount of, again, traders just participating in the market itself. And so the first things you can really look for is when people are getting stopped out. So usually when you have a stop loss, it is a market order. Again, Exocharts and the clusters, we are looking at market orders and not limit orders. Limit orders are a whole new thing, whole new video. So usually when we have a large wick down like this and people are getting kind of stopped out, you can identify this with people getting stopped out when you see a whole bunch of longs closing and then shorts kind of opening up as people are getting their stop losses kind of hit and they're getting stopped out of the market. So usually when you are longing, you will set a stop loss, and that will be a market short that you use to get out of the market. And kind of contrary to shorts, when you shorting a market, you'll put your stop loss above your entry, and you'll need a net long to close out of the market. So it will be a market order again. And so again, these are just stop losses getting hit. And you can see that net longs were closing. And especially on this example, this candle right here, you can see 13 million net longs were closing, while a whole bunch of shorts were opening up, 4.1 million. So that is just something to look at, really. And so I'm just going to turn off net longs and net shorts, turn back on open interest. And again, you can see when price was coming down, open interest was coming down. And so this is generally a bearish sign. And you can see we were having pretty large volume here. As you can see, the middle of the footprint chart here. I got to put my picture up over here. So the footprint prior statistics, the first is CVD. We'll go over that later on. Next is volume. Again, the total of buys and sells within the market. And then the next is delta, which is you can look at it as the difference between market buyers and sellers. And so typically when you have positive delta, it is a sign of more longs than shorts. And then when you have negative delta, it is a sign of more shorts than longs. And so it will adjust to more blue color in my template here. You guys can get a copy of the template in the Discord under Gunslinger Exochart levels. Just look around for it. And this is the order flow template. And again, CVD will be negative. And so really how you calculate CVD is what it stands for is cumulative volume delta. And so really what it's made up of is the previous delta and it just adding up over time the amount of volume delta that is happening in the market. So typically it's not a good sign when you have large negative CVD, really. So to really calculate and kind of look at what CVD is, again, you're going to take the last amount of delta subtracted from the last volume, cumulative volume delta. So again, right here, we're reading a negative value of 107 million. Again, this will round up, so it won't be totally accurate. And then we're going to add or subtract, in this case, another 10 million. So the CVD from the last candle added added to the ongoing per se candle. Say there was no other price action here. We're just going to add this current delta to the CVD. And so really 107 million plus a negative 10 million is again 117 million. And so you guys can just keep on doing that over time. And you can see it is negative. Usually when delta increases, CVD will increase. And so they're kind of just they're kind of twins, you can look at it. And so going off of CVD, this is the really thing I want to talk about. And this is identifying absorption. Absorption is basically when a large player is setting limit orders and just kind of sucking up all of the small retail traders' orders and just really trying to reverse the direction of the market. And so you can easy way to identify this is with divergences of CVD and price. And the main factor you want to be looking for is hidden bullish or bearish divergences with CVD and price. And so right here is a good example, a prime example of a absorption. And this in case is a absorption long. And so again, just as a reminder of what a divergence, hidden divergence in this case would be. In this case, we're looking at a bullish divergence as it is a hidden divergence. And so we got price making higher highs, as you can see, a change in market structure as our indicator oscillator, in this case it's CVD, is making lower lows still. So they are kind of diverging from price. And so just an example of really what is going on with absorption. Again, in Exocharts, we can only really see the market orders going on. And you can see right here, we had a whole bunch of orders of shorts, market order shorts, as you can see. And so we had price coming down, making lower lows, just a lower lows channel structure. And then we have on the bottom, this is kind of our indicator right here. We have CVD kind of winding its way down with the market. It's moving with price. And then all of a sudden we get a change in price where we kind of make higher lows, as you can see right here. And then we'll have CVD continue making lower lows. And so this is a hidden bullish divergence right here between CVD and price. And so really what's causing this is a whole bunch of small retail orders, shorts, basically shorting towards the bottom of a price support, whatever. And so you'll have, say, like 10 market short orders at $10,000 each, just kind of setting right here and kind of moving price down a little bit. As we have one large player right here who has a limit long order sitting right here. Again, usually larger players can't really market in their whole account or whole position in at once because they get slippage or other things, more fees involved, and it's really not convenient for them. So again, they'll just set a large limit order here. And so for this example, let's say this is a $100,000 limit long. They're providing their liquidity into the market. So they'll just set it at this certain price, a huge support, and there will be a whole bunch of retail traders or tiny account people trying to short towards a support. And so really what this causes is price not to really move around much and just kind of stall and procrastinate, I guess, as the larger players are kind of entering the market. And so if I were to really explain what's going on in a GIF, I guess, a way of looking at it is really a large player, the whale, for example, and a whole bunch of retail traders or the little fish shrimp things just getting sucked in. They're literally just kind of giving their money away to the larger player so they can get their limit order filled. So it's really just a way of transferring liquidity, and really just a larger players kind of move the market. So you kind of want to look at what the larger players are doing. So again, going back to our example right here, the first thing you want to look for is kind of price slowing down at a support. Always important to do your TA so you can identify the support and resistances, as this does happen in short examples. This example is a long example. So again, we have a hidden bullish divergence between CVD and price, and the larger player is just kind of setting their orders. And so when exactly would you enter based off of the CVD absorption long? So if we go into Exocharts and again look at the order flow, this was the candle that was happening at the first pivot. You can see it wasn't too large of a candle, and you can see there was a whole bunch of stacked shorts coming into the market. When I say stacked, I mean like 3 or more of these highlighted black short clusters. Again, this is a delta cluster and it's showing imbalances. And so there were many more shorts than longs in this case, back to back. And you can see a whole bunch of shorts just kind of coming into the market, as you can see right here. And so with this, what you want to look for is, again, CVD and volume. And so you can see CVD was at a negative 1 billion and volume was very high, as it was at 89 million. And so this was really the first part of it. The second part that completed the divergence was when price was making a higher high. And so you can see the low of this candle right here at around 38,000, and price did come up a little bit at around 38,175. And if I move my picture out of the way too, so you guys can see, you can see that if we turn on our delta bars, I'll turn off open interest for right now. You can see the delta bars or our CVD graph right here, our indicator. It was making a lower low while price was making a higher low. And so again, look at volume in CVD. You want to see those kind of changing, and you want to see a large amount of volume happening. And so you would have identified this as absorption at around this price. And so once you have identified that, what you want to see now is a whole bunch of longs kind of opening. And so if I would have zoomed in on this candle when the I guess the absorption or the divergence got confirmed, you want to see longs coming in. So you can see here that on this side of the candle, again, is longs, other side is shorts. And you can see a whole bunch of stacked limit longs, or market longs, I should say, forget limit, market longs coming into the order. And so what you want to see too is these longs kind of trapping these limit shorts. And so you want to see the longs coming above the limit shorts right here. So they're trapped, they're underwater, they're losing money. And so this creates a more of a bad scenario for the trapped longs, the little retail traders. And so what they can either do is wait for price to come down, or they can close out of their current position. And really when they do close their shorts, it will pump price up a little bit more. So really they have two options. So usually when this happens, they're kind of screwed. So again, you would enter on the confirmation of market change. So you would have probably entered up here a little bit or over here. Again, on the confirmation of the divergence happening. And you would just set your stop loss right here. And then you would have entered again like so. And it's important that you wait for and see that these traders are kind of trapped, as it will give you a good confirmation of running along. And you can see price has been going up ever since that absorption. Next thing you really want to look for is you want to see price go above the VWAP. And again, the VWAP is this yellow line. You can turn it on and off by going to the bar up here, VWAP really. So when in a long position, really your next resistance you want to look at and kind of want to break through is the VWAP. And really that can be a first take profit. And as you can see, eventually price did break above the VWAP, and now it's just kind of going around it and just kind of hovering higher. So that is the next major like kind of resistance or support when you're shorting or whatever of taking profits at. So VWAP is pretty useful in that case. And so this is an example of an absorption short. It's not really the best example, but likewise, you got price making lower lows, or lower highs, I should say. And then we have our CVD making higher highs. As you can see, if we relate this point and this point to the CVD on here. And again, you can look at the toolbar or the footprint statistics on here. If we point up, we got 62 million CVD, and then zooming out to this guy, here we got about 65 million CVD, so an increase in CVD either way. And so again, what did we see here on top? We saw a whole bunch of stacked market longs. We had 4 of them, really. A large one, especially one with like 5 million limit longs right here. And so again, what you guys can look at is the number of longs and number of shorts coming in. So you can see there's a lot of sort of longs coming in. And then, of course, you would wait until price traps those longs. So you'd wait for price to come down, and then you would enter your limit order up into here with your stop loss again above the last high over here. And this would have been a nice move you would have rode down. Sorry if I can't really zoom in that well. I don't really know what's going on here, but yeah, you would have waited until price came down below So you would have probably waited until this candle or this candle really, and wait for that CVD divergence to confirm. And then you would have waited down here. And then, of course, you would have had trapped longs, and they would have probably closed out their position and further dumping price down. That is pretty much it for absorption and just kind of identifying it. Again, please like the video if you learned something new from it. I'll leave a link to a Discord where I have this template already kind of filled out, and you guys can import it into your charts. And I'll leave this in a playlist of Exocharts, so feel free to check out my other Exochart videos. I know it can be pretty confusing, so I do my best to explain it step by step, kind of. And just kind of going over what absorption really want to look for is, again, you want to look for a hidden divergence between price and the oscillator, or oscillator being the CVD. And again, double check on the footprint bars to bar stats right here of the CVD price, again on the top. Again, you want to see a large amount of volume coming in. That will identify it by turning a darker color. Usually this really dark gray can get a good feel of the amount of volume. And then you want to see, again, trapped traders. In this case, we wanted to see trapped longs when shorting, and then you want to see trapped shorts when longing, and wait until a confirmation in market structure, so a reverse in the trend of, or local trend of the market, and then wait for the traders to get trapped. So you want to have entered on this price because you wouldn't really know that they were going to be trapped. Wait until they do kind of go underneath water and are kind of trapped, and then enter down here with our stop loss above the last high. So it would have been a very good position, and feel free having fun with this strategy. So thanks. Bye.